Well, happy Sunday, everyone. It is Shooter, and we are going to go over swing trade note. Of course, at the end of our presentation, please review our disclosures. I'm just jumping right into it. Just the basis, even futures opened this evening kind of bullish. We've had 3 consecutive closing weeks bullish. Most of the time, we don't run 4 and 5. Most likely outcome is 3 weeks bullish, flat, or negative. So maybe this next week we get a little bit of a lean to the downside. So we want to really watch that right after the opening range tomorrow and really manage our risk and make sure our stops are tight or in good positions for any gaps or gains that we may have. That's one of the challenges in the options as we're heading into uptrends, or we're in uptrends that we've been in for quite a while. When we come off, they can just annihilate your positions if you don't have time, which is one of the reasons we've been moving out in time versus, doing 3 to 4 weeks out, which we were doing during the initial phase of the bull trend. All right, now performance last week was pretty decent. We ended up plus about 541 a contract total. As far as earnings this week, it's slim. Main one I'm interested in is Nike. For some reason, I think it beat. They beat last time, but they guided down and we got walloped. If they come back and have relatively flat guidance or good guidance and they beat again, this thing could rip from the price that we're at. So that's one of the reasons it's in swing trade notes this week. And Carnival Cruise should do well. We might chase that after earnings, after the open, but I'm not sure that I'll throw that into fundamental trend. Okay, so I like the Mag 7 stocks that haven't moved, and a few of the outliers, as I call. They basically Cat, FedEx, and Micron. Whichever direction they all three are going is where Mr. Market is going. So that's sort of my mindset. I like Tesla because we had this October 10th event. I like it pulled back just a tad bit more, but I don't know that it's going to give it to me. And then we have a number of 50% back setups and then one breakout setup that we have in play. Now, Wolf, we had last week. I'm rolling it. I just updated the numbers here a little bit because we didn't jump on board. So I've moved it from the $10 call to the $12 calls. Same scenario. We basically have gone nowhere. But as far as the upside, I think we do get and break out here. At least I think we tested this 1284. So start off with the November 12s and then add 15s and 20 as it's working. But realize the way the count is, it's much more sluggish, I guess, is a good description than what I'm seeing here. That's a pretty impulsive move right there. Not a huge range, but if it moves 50, 75 cents a day or every couple of days, that's a heck of a move for this stock. And, we've got quite a ways to go up to our 19 bucks here. So I'd like to catch that whole move there, have something on. So that's my mindset. And then let's take a look at Nike. Now, what I really like about Nike, gap fill is up here at 93.39. I love this flag right here. It's holding the prior resistance band. I didn't note on there how far back that was, but it was like 2012, 2019, something like that. And then we have that gap fill. So I think the gap definitely gets filled, but this looks more like a launching pad to me. And, unless we have really bad earnings this week, we're going to be right back at this 103 pretty quick. I think my 90 cents are the 61.8 is the 103, the 78.6 is 112.09. We have good earnings and decent guidance. We're going to be right back up into this range here. So that's what we're trying to catch as far as Nike's concerned. Now realize, like any earnings play, I view them as a lotto. So do not venture any capital that you can't afford to lose. You have to assume going into that it's a loss, right? That's just the mindset. All right, now Subway, nice breakout look here, right at resistance. We've been testing it. Shallow. I mean, it's just getting ready to pump. Now, our range is up to about 130 on our primary wave 3, if that's the case. First resistance we're going to run into is about 109. I only want a piece of this 109, 108, 56, and then I will roll to something else. But I like the upside, to Starbucks because it's not, the lines weakened up for a couple of days, but outside of that, I'm still seeing the mob lines over, at least in my start. So, I drive by 3 of them at different times. So, I like to look at Mr. Market. And, for example, Bros constantly has lines as well, one of their competitors, but it's in a completely different place than from where Starbucks is as far as their locations. So, so everybody's buying coffee. Not only that, seasonality here. We're going into winter. more people buy coffee. All right, now Redfin. Challenging part on Redfin is because we have a 3 right at the breakout line and then our 4 back test. However, this 1169 is a lower price than our back test. So the challenging part here is where our date expirations are. So we have November 15th, $13 calls. I like. Then January 15 and $20 calls. And basically, there's no spread. I don't like paying premium going into a trade because it automatically skews your risk. So start off with the 13s, or I'd start off with the 13s, about 40%, then add January 15s as it continues to work. We get above that breakout line and back test it, then add those 20 for about 30% split both ways. So, and that's sort of my thought. Now, stop would be closed below 930 for me. Now, Val, I really like the way Val's well. I haven't looked at this in quite a while. So, the December $13 calls were 1178. Only prime intermediate wave 1 is about 1463. Then we got a back test, which is reasonable considering where our resistance has been. If we break above this, we'll hit this resistance right here when we go up here. But then we still consider our primary wave 1 is way up at 2350. So, we got some decent upside, as far as the look. Close below 1117, I would be trimming. Now, you have 2 concepts you can use as far as quite often I quote stops, but I'm running hard. So, and it depends on what my P&L is. If I've got a number of wins and, my weekly, my monthly, my quarterly, and my annual profit is up to a certain percentage. Basically, the way I manage my stops, my risk is capped maximum across the board at 20% of my gains. So I'm not going to go any more than 20% of my gains for the prior week. That's my risk, right? Now, at times, I'll push it to the monthly when I really like the setups and the numbers. So, my thought is that stops are important, especially when you're learning, because you have to understand when a setup doesn't work, it doesn't work. Honestly, most of the time you can tell the stops are going to be taken out because, for example, if this gap starts getting filled, I might actually trim that position. That's up to you whether you trim it if it gets into the gap. It gets into the gap, it's giving us a signal. It's telling us weaker than we think it is. However, it popped over the breakout line and it basically held with the back test so far. So it looks pretty strong. Now, I stumbled upon this UP Fine Tech Holdings. It's a Chinese startup, kind of. There were a large number of calls out there. That's $6, and it's a total outlier. Look here. I read up on the company. I guess they're fine tech in China. They're focusing on clean energy and bringing it to certain government agencies, et cetera, et cetera. And they've only implemented about 20% of that allocation that China put into renewables to try and make the government more green. So now I'm viewing this completely different. I went out. They were 11.15 strikes, right? The $6. And I didn't like the premium on it. It was like a 30% spread. I didn't like that. I wasn't going to pay. Obviously, when you start seeing that in a specific strike, what it's telling you is those owners of those calls, right, are not willing to sell them for market. They're asking for a premium, which sort of reinforces my thought. Somebody always knows. There's always an insider somewhere that knows something we don't know. Even more so being a Chinese entity, even though it might be listed, that doesn't prohibit that from going on in China. So somebody probably knows with that many shares. Now, granted, it wasn't that big of a trade. It was like 400K. But still, on this type of a fine tech, it was good. It was a decent outlier, and I want to take a shot at it. Now, I ran with the January $5 calls because there's no spread. So above 505, I realize it's going to be in the money. We're buying it at the money or in the money, is the breakout line that I want to chase. All right. I'm going to run a hard stop. It's either going to work or it fails, right? Swing target is 875. That's the look of it. I really don't see any reason to do something different than that because the volatility here could take out your stop. I mean, literally, we could test the floor and then still go because it's like a FOMO. Divergence we have down here on our low, long period, really years, July 2021. And all of a sudden we have this, when I looked at it, I was like, man, that's a weird outlier event. So I went back and looked. We had really nothing. None of these rallies did we have this kind of volume that came. So my opinion is somebody knows something. So again, any lotto, right? Don't risk capital you can't afford to lose, right? And maybe only do $500. I don't know what your risk model. Maybe you do $1,500. I'm not telling you to do a full position size. What I'm saying is I like to look to the upside. I like the potential gain on that as well. And the 50% back is all the way up at 16 bucks. So we get a higher volume candle than this, and we get another duplicate candle of this, and we get above that $6.34. I may start positioning myself to hold for that 50% back, because this leg that I'm looking at is kind of shallow as well. Whereas I see more euphoria in that pump. Look at where these volume periods came in over here, as far as these numbers. And, it had decent, options at that point as well. So, but that's what we have for this week, folks. Great trading. Until next time.